So how long should you keep your records related to taxes? Let's break that down because it's actually pretty straightforward and simple.
JJ, the CPA is here.
JJ the CPA here. Hope you're doing well. Here's a simple answer. 7 years. Why 7 years? Well, the IRS has a 6-year statute to audit your return unless, of course, you have fraud or you're not reporting income. So with that, by keeping it 7 years, then you're going to ensure that in the event of inquiry, you have these documents. Now, what would be these documents that you would want to retain? Pretty straightforward. Credit card statements, if it has any expenses on it that you've deducted, bank statements, and I think no matter what, personal or business, because that's where you prove that income was complete as reported, expenses were then paid properly, and then any receipts that would be related to any type of deductions. Now, if you use QuickBooks in your business, well, then of course you'd want to keep that data file. And if you're buying assets, you would want to keep those records at least 7 years after you've sold the asset. So when you buy an asset that you're writing off, well, then that receipt or that document you're going to need at the time that you sell that asset. And then that's when there would be a taxable event. And then 7 years after that, well, you might be safe to get rid of that documentation. So with that being said, should you keep documents longer than 7 years? Well, that's just up to you. All right, hey, thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me. You have a great one.
American CPA.